Hi traders, Dr. Barry Burns here with Top Dog Trading. Okay, I've started a new service. I call it the Ask Barry service. It's real simple. On my blog, which is www.topdogtrading.com, first page of my whole website is my blog. A lot of free things there for you, free articles, free charts and videos and so forth. One of the things I've added there also is this Ask Barry service where you can actually go there, fill out a little form, and ask me any question that you might have about trading, trading psychology, money management, technical analysis, the markets, what's going on in the markets right now. Absolutely free service, no obligation. It's not just for my students, it's for anybody. Any time frame, whether you're trading stocks, futures, currencies, options, commodities, day trader, swing trader, investor, I do all that stuff, so feel free to ask me any question. And if I don't know the answer, then my answer will be, I don't know. I'm pretty upfront and honest about that stuff. On the other hand, most of the time I can answer it very well, and I promise to answer everybody's question personally and directly via email. And it's been going real well. And one of the questions that came in recently, and I do use some of these questions for my blog and also for my YouTube videos, is about the oil market. And I don't reveal the identity of people who ask the questions, of course. But this is OIH. Okay, so this is actually oil services. But it's a very popular exchange-traded fund. It's a good one to be watching at all times because the oil market is obviously very important for the economy and for the country. And there's often, good trading vehicles or good trading opportunities with this vehicle. So let's take a quick look at it here. And I've created a longer video that's on my blog right now. But here's the bottom line. This is the daily chart. And so this line here, this is a moving average. That's the 50 simple moving average. So we're in an uptrend, and this black line is the 15 exponential moving average. Okay, this section down here is momentum, and this section here measures our cycles. And then I also use a longer time frame to confirm the signals on this chart. So we don't have time to go into all of that right now, but here's the basic picture on OIH. And let me just clean up my chart here quickly. So here's what we have. We've had two retraces in the trend. First one was here, second one was here. And actually we've had three. The third one is here, but we haven't broken this high yet. And so that gives us a 1, 2, 3, 4, 5, 6 wave pattern, trying to work on number 7. 7 is if it breaks this high, then we'll have a 7 wave pattern. The average trend is 5 waves. So we have reached the average trend length. That is done. And we're working on extending that trend. What that means is, normally they say the trend is your friend. Well, things are not quite that simple in trading. Trading can be very simple, but you have to understand the nuances of things as well. And when they say the trend is your friend, it's not quite that simple. The trend is your friend as long as you are within the first 5 waves of the trend. In other words, the first retrace and the second retrace in the trend, those are your friend as long as we have some other things lined up as well. And that's primarily looking at the next higher time frame. We have to make sure the energy of the next higher time frame continues to be up. If it is, then these two retraces are very friendly. In other words, they give you high probability scenarios to enter on the long side. Now, this entry here, the third retrace in the trend, is no longer a high probability scenario. The trend is not your friend after you have put in a 5 wave pattern, because now you're in an extended situation, and so the trend is not your friend. The trend is your foe, potential foe anyway. So what often happens, that doesn't mean that this trend has to end. Nothing ever has to happen in trading. But we put together probability scenarios. And those probability scenarios are dependent upon the energies of the market. We measure those energies by using these technical analysis tools. And we want to measure different energies. In other words, we don't want to use, two different trend indicators and two different momentum indicators. We just use one for each type of energy. So we use one for trend. Trend is up, but it's not our friend, so we can't use that. That does not count to the long side. We use cycles. We're looking for cycle lows, obviously, to get in on the long side. We use momentum because the trend might be up, but is it strong or is it a weak trend? Again, trend is only your friend if you have some strength behind that trend. If it's a weak trend, trend's not your friend. So we use trends, we use cycles, we use momentum, we use the next higher time frame. We want to make sure that's on our side. We use volatility, we use volume, and we use support resistance. And those are 7 energies. And what we do is we put it together like a law case. And we use preponderance of the evidence. How many of these 7 are on our side? And that is how we objectively create a probability scenario. If only 2 of those energies are on our side, we have 2 out of 7 pieces of evidence on our side. That's not enough. That's not enough to put our money at risk, so we pass on the trade. If you get 5, 6, or 7, okay, now the probabilities are on my side, and it may be worth putting my money at risk. And it's a very simple, very objective approach on how we do it. And then we also know exactly where our stops are, both our hard stops and our trailing stops. There's no guesswork to that at all. It's just a matter of following the rules. And again, it's all very objective based on these indicators as well as price patterns. So, well, that's all the time I have on the YouTube video here, unfortunately. If you're interested in getting this entire video on this topic of OIH, I've put together an entire video that's for free. It's on my blog. Just go to www.topdogtrading.com. The link is on my YouTube front page here. Just click on that, and you'll go right to this this full video where we look at both time frames and we analyze everything in more detail. That's about I think it's about a 17-minute video, so it's about 3 times longer, at least 2 to 3 times longer than this one. Okay, thanks everybody. This is a great market, so you should always have this on your watch list and be watching the technical analysis.